Welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide online divorce mediation and valuation services in St. Louis, Missouri. Today, we will discuss cryptocurrency and divorce with Carolina Martinez, a certified fraud examiner, certified cryptocurrency investigator, and a cryptocurrency accountant in Miami, Florida. She has over 16 years of experience in the accounting field and has worked in different industries such as hospitality, education, telecommunications, public accounting, aviation, real estate, and cryptocurrency. She's an advocate for human rights and is very passionate about defending and protecting the most vulnerable. Welcome, Carolina. How are you?
I'm good, and you? Thank you. Thank you for having me.
Oh, this is so exciting. Cryptocurrency really isn't well known, or I think we know some of the keywords or buzzwords, but I think it's going to be excellent for you to help us understand this a little bit more from an accounting perspective, from a divorce perspective. But we're going to start at the basics because some of us, we will remain unnamed, really need to start with just understanding like what is cryptocurrency just in general.
Okay, cryptocurrency, to put it in simple terms, it's like virtual money. It's digital money. Basically, cryptocurrency was created to have a decentralized banking system. So right now, if you have your dollars and you want to keep it safe, you go to the bank and you deposit it into the bank. Cryptocurrency is digital and it is based on a blockchain technology. What I mean by blockchain technology is that it is in a decentralized system, and blockchain technology cannot be tampered. It cannot be changed. Once a transaction happens in the blockchain, it there's nothing that you can do to change it. So that's basically what cryptocurrency is. You can use it to buy things or services. Right now, if you go to the movie theater, I'm not gonna mention names because we're not doing a promotion here. But if you go to a particular movie theater, you can go and pay. If you have your cryptocurrency wallet on your phone, you can go and pay for the movie ticket and as well for services. For example, in my firm we take cryptocurrency payments, so you can pay for services for that. You can also use it for investment. Let's say if you want to buy Bitcoin, um, even though cryptocurrency prices fluctuate a lot of people they can buy Bitcoin. Let's say if they bought it when Bitcoin was $10,000. Right now, they will have a gain of about $50,000 because the price is over $60,000. So it can be used for many different things. The main reason people use it right now is to do investments and to, unfortunately, a lot of people that do not know how crypto works, they use it to cash out quick money, but that's another subject.
Well, and that's what, I think that most of us who didn't know anything about cryptocurrency saw it recently with the Doja coin, right?
Yes.
And and everybody got excited about it, and there was a whole population that thought that they had kind of come in and shifted the market. But did is Doja coin and Bitcoin just types of cryptocurrency, or how does that
Cor-
work?
Correct. There are many type of cryptocurrencies. There is Bitcoin, which is the first one. That's the first one that was created. And Dogecoin, it was basically what they call a meme coin, which is someone just created just to have fun and just to prove that cryptocurrency was just a joke. But then it grew. Then we had Elon Musk talking about it. We had Mark Cuban talking about it, and then everybody and their mother wanted to get into crypto. So I have a colleague that he told me that his grandmother was talking about crypto. So he said, "This is where things are getting interesting now because even our grandparents are talking about crypto." So yeah, and there is another type of cryptocurrency. There is many, but there is one that is called stablecoin. The stablecoin is actually backed by an actual currency like the U.S. dollar or the euro. So there is many different ones. I cannot tell you which one to buy or invest because I'm not an investment advisor, but there is so many coins right now out there that it can get a little bit complicated for people that don't understand crypto and even the people that do understand it. I myself have to be doing research every day because it changes by the minute.
Okay, because that's
Hmm.
that's what I was wondering too, because it seems like it is very complex and complicated. Even if we just let's step one step back, because then we'll talk about kind of the tax effects of investing in crypto. But if we just step, you said something, and there's a piece of this that I don't always understand is the blockchain technology, and I feel like the blockchain technology, uh, I don't so get. It seems like it does protect the currency, but it also like keeps people out in some capacity. So can you elaborate on blockchain?
Basically, the blockchain technology, there's many different blockchains where the crypto currencies are created, but the main purpose of the blockchain is to be a public ledger. So
Oh,
everything that happens in the blockchain stays there. All of the information of the transaction is there. The only information that is not available in the blockchain is people's name.
oh,
So if you send me, let's say, you send me one Bitcoin, and I receive it in my wallet, you can see that it came out of your wallet and it came in my wallet, but you cannot see your name or my name in that transaction. So the purpose of the blockchain is that everything is public, but also keeping the privacy of the people doing the transactions.
mm-hmm,
There are tools out there that can trace those transactions to the people, but those are complicated tasks that specialists have to do. Not, let's say, if you are a regular person that just wants to know if someone has crypto and you go into the blockchain to see it, you will not figure out if that person has crypto or not.
sure. Well, and is that how people have like lost their codes or their, you know,
So, so the way that people can protect their crypto is to have private keys. You can
okay.
have your wallet address is public, but you have a private key,
Okay.
and you cannot do anything if you don't have that private key.
Mhm.
If you expose, let's say, I have seen clients, and it happened to me and my husband when we first started back in, my husband started in 2013, I started in 2017 on a personal level. If, let's say, you have a conversation with someone in Telegram or some YouTuber, which I have a client that happened to him, he was watching a YouTube video and the YouTuber had a in the description said, just reach out to me on my WhatsApp so I can help you invest in crypto. So my client spoke to that person and that person told him, oh, send me one Bitcoin. Thankfully, back then, that Bitcoin wasn't $60,000 worth. So unfortunately, he gave that person his private key. When you want someone to send you coins or you want to send coins to someone, you just need to give them the wallet address. Do not ever give them your private key.
I got
Because yes, because basically that's, to put it in simple terms, if you want to get into your house, you are the only one that should have your key to
Mhm.
open the door. If you give the key to somebody else, that other person is gonna be able to enter your house.
Mhm.
So that's how
Okay.
it works.
So that makes sense. And if you use the same analogy with the house, it's like people might know your address, but they don't have a key to get in, so they still can't access the contents. Okay.
Exactly.
That was really helpful.
Yeah, and to explain it based on the blockchain, let's say you have your house, and if you go to the city records, you put your address there, you can see your house sales history. You
Yes.
can see when it was sold. Sometimes it has the name, like here in Florida, we have the name of the people that bought it and sold the property. But in the blockchain, it would not have a name. It would just show you address, your home address. But if it doesn't give any more details for you to get into that house.
Hmm. But
Hmm.
would it show the actual amounts that have been transferred and maybe like to another address as
Yes,
well? So
it
it's
shows
all
the actual
public.
amount. Yes. Hmm.
Okay. That makes
Like
sense.
like I said, I always tell to my clients like what happens in Vegas. I'll say what happens in the blockchain, it stays in the blockchain.
Gotcha. So there is a way to trace it. It just also is kind of, not very clear on who owns it.
Correctly.
Understood.
Hmm.
Gotcha. So if you lose your key and nobody else has the key, is that how some people have kind of like lost their
So I'll give you
Bitcoins?
I'll give you my personal example. Back in 2017, our computer got hacked. We had, I don't remember how many Ethereum there, but we do have a private key. And the way that we set it up was for if somebody else wants to use it, they need a second key. They need to create another key, but they also need our key. A lot of
Mhm.
people don't do that. A lot of people, they just have one key and they don't do more security measures. So our computer got hacked. One of our wallets got hacked. Right now, that wallet is worth almost $2,000 because it was Ethereum, which is one type of coin, the cryptocurrency coin that we bought back in 2015. And we know that that other person tried to get it, but since our security measures were, that other person created another key, but he or she needs our key to have access to it.
Mm.
What happens with a lot of people is that they do not put security measures into their wallets or their exchanges. So if you don't have that type of measure and some your computer gets hacked and you have your private key saved in your computer, let's say you have a Word document or you have it in an email, and
Mhm.
that hacker is able to find the private key, they can get into your wallet and just steal everything that you have.
Mhm.
Fortunately for us, we had the private key printed in a piece of paper, so it was not in our computer, and that's why the other person is not able. Right now, that those coins are there and nobody can take it, and we're trying to get it, but it's a very hard process. So whenever you do anything in cryptocurrency, you have to make sure that you know what are you doing, and let's say if you're sending coins, where are you sending coins? Because once you send it, you might not be able to get it back ever.
Mhm. Well, and if we go back to the Doja coin, then if
Mhm.
you're buying Doja coin, you're really just investing in a company that's based on cryptocurrency, right? You're not really buying cryptocurrency when you're investing in Doja coin.
Dogecoin is different.
Oh,
Dogecoin, the person that created it, um, he really wanted to prove that cryptocurrency is decentralized. So when he created it, he basically sold all his coins. So nobody owns Dogecoin. There is
okay,
not an owner there. So
okay.
people buy it. Going back to the blockchain, they buy it out of the Dogecoin blockchain, which I don't remember which blockchain is that they use because there is different types. But right now there is not an owner, and that's why a lot of people like Mark Cuban and Elon Musk, they are supposedly pro Dogecoin because it's proving that you don't need a bank behind it, you don't need someone behind it to be able to trade those type of coins and to buy it and sell it or buy anything. Right now, there are movie theaters accepting Dogecoins as
Mhm.
form of payment.
Well, and there's certain apps that even, we don't have to mention them, but there's certain apps that it says I can invest in Bitcoin, right? And I can
Hmm.
purchase it currently. So that's probably like the least secure way to invest.
It depends.
Okay.
You have to make sure you know what you're getting into it. If you go into an U.S. Exchange, let's say Coinbase or Binance, they do offer Coinbase, even if you want to learn how cryptocurrency works, they give you rewards. They give you coins for free. Of course, they will not give you $10,000 worth of Bitcoin. They tell you, I'm going to give you $10 worth of Bitcoin for you to learn how it works, because they want people to learn how it works so they can get more people buying their coins, buying the coins in their platform, because they're not the owner of the coins. They basically, it's like the stock exchange market. They they have their companies publicly traded there. So if the coins are traded in their platform, so you have to be careful where you put your money into it. I always tell people I'm not a financial advisor, but if just go with the when you don't know how it works, go with the big companies that are U.S. based for the U.S. clients, and make sure you do your due diligence. And if if companies like Coinbase is offering you to get $10 for learning, I wouldn't mind taking that, because
Right.
they have small courses where you can learn. They even give you a little quiz at the end. Um, so yes, those are good. But then if you get one company that just came out of nowhere saying, if you invest in my brand new crypto that I just created, if you put $1,000, I will give you $10,000 in 3 months. That's a red flag. Do
Yeah.
not invest in that. So
Yeah.
you have to make sure you do your due diligence before. And it depends on the company, how long they're been in business, and what is their purpose behind it.
Hmm. No, I think there's even more complexities than I originally thought.
Yes,
But
it's a little bit complicated, but that's my main goal. My main goal is to educate people as much as possible.
yeah, no, you are breaking it down very simply. So let's
Mhm.
say I get comfortable. So I figure out a little bit about cryptocurrency. I figure out that I can invest in it, and I buy some cryptocurrency, right? So
Mhm.
now I've invested in it, but I don't really understand the tax liability. Like, is there any tax liability even in that situation, or can I just trade things back and forth?
Yes, that's this big misconception. A lot of people, since cryptocurrency was created uh, to be decentralized, to not be backed by anyone or any bank, especially banks or the government, Um, it also offered the sense of security and privacy. So a lot of people still believe that you don't have to report your cryptocurrency transactions. But I hate to break it to a lot of people. Mostly everything in that you do in crypto is taxable. 90% of the transactions that you do in crypto create a taxable event. So let's
Hmm.
say you are taking those courses that I mentioned to you previously in Coinbase or any other platform, and you get $10 worth of Bitcoin. That will be considered income according to the IRS. It will be an income to you because you did not do anything. You did not purchase that. It is a taxable event that you will have to pay taxes for ordinary income for things like that. And then if you do a lot of courses, just to put it in simple terms, $10 here, $10 there, it can reach after the $600 and or more. I have had people that they get into other type of transactions. Some of them is called mining or staking. Um, I don't gotta go into detail because that's a bit more complicated. So basically, the purpose of mining and staking is for you to receive coins into your wallet, and that is an income event. Another type of transaction that could increase your tax liability is, let's say you bought Bitcoin last year and then you sell it this year. That will create a capital gain Either you had to pay a long term for long term capital gain or short term capital gain, and that depends on how long you hold the coins for. If you hold the coins for more than a year, then you will have to pay long term capital gain, which will give you a lower tax liability because the rate on that will be less. If you have the coin for less than a year, then it might increase your tax liability because then it will be based on your regular taxable bracket. So then it gets more complicated because then you will have to you will have to do your cryptocurrency tax reconciliation, which will help a lot of clients to do, and then you will have to add that to your tax returns. And based on your overall financial situation, is your how the bracket will change for how much you will have to pay in cryptocurrency, capital gains, loss, or other income.
And um, and but I think one of my questions is having to do with the taxes is are wherever I'm investing in the cryptocurrency, are they reporting that these transactions are happening, or am I responsible for self-reporting or providing that information to my accountant?
Right now, there is not a lot of guidance from the IRS, but you are responsible to self-report. There are some exchanges that are now reporting their transactions to the IRS. A lot of them we don't know which ones are those, but you can guess the ones that are already publicly traded, like Coinbase. Uh, some that are already in a court process or in a case investigation from the IRS. So I always tell my clients, do not wait for the IRS to come after you. Just self-report it. It's better for you to pay what you have to pay than just go and pay penalties and even have a more complicated case if the amount of money that you're hiding from the IRS is a big amount. You know that it could go even into criminal charges depending on what type of transactions and your intentions for hiding it. So I always tell my clients, self-report it. You are obligated to self-report it. Do the right thing. Do not wait for them to come after you.
Mm-hmm. And there's no difference currently in the tax rate regarding crypto versus other capital gains. Do you hear anything? I think, right? Do you hear that anything might change?
Yes, there are right now. There is not, like I said, there is not a lot of guidance, but they are working right now. There is a bill in Congress that I'm not gonna go into detail right now because it's more complex. But yes, the way that we could save money in taxes with the capital gain right now in crypto might change early next year based on what the Congress is discussing now. So basically, what they're trying to do is basically see cryptocurrency more like a stock where you cannot do what we can do now. We can do the loss harvesting rule in cryptocurrency, which means that you can sell a coin at a loss today and buy it right away so you can save money in taxes. With stocks, you cannot do that. You will have
Mhm.
to wait 30 days to buy that stock again. So if they're saying they're discussing it in Congress, if they change the rules beginning of next year, then crypto is gonna get a bit more complicated. and, but let's see that they just talking about it. Probably they will get it will get approved. Probably it won't get approved. But since there is not a lot of guidance out there, um, we try to help our clients as much as possible, and we are very conservative in the way that we do our reporting because the more conservative you are, I think the better you're gonna come up if you have any issues with the IRS.
Mhm. Yeah, and I think everybody's, even legislature is trying to figure out how to work with this, and they don't always think about the accounting effects of some of the things that they do.
And the thing is that a lot of them don't understand it. A lot of government agencies do not understand how cryptocurrency works. So that's why it's very complicated for them to actually come up with something. Every time that I get a client complaining about it, I'm like, okay, but do you know how it works? Do you actually know how it works? Because a lot of people, they don't know how it works.
Mm-mm.
So they are relying on people that either have little knowledge or they just trying to figure it out. So
Mm-hmm.
I do think that they're gonna make a lot of changes. I don't think it's gonna happen soon, within next year, but it will happen sometime.
Mm-hmm. Well, and I think you presented at least one way that you can prevent cryptocurrency fraud with the double key or, so, but are there other ways? And I probably didn't even totally understand the double key, but basically one was that you have your key, and then if anybody accessed your information or, got into your computer, that they would have to have your key and they would have to create another key. But are there
If
other ways? Yes.
Yeah, if they create another kit, they will need your kit anyways. But
Mhm.
there are many ways. The first thing, the most basic one, is before you get into anything in crypto or any other thing in regards to investment or putting your money in other places, is do your due diligence. Make sure you understand why you're putting your money into it. Understand how it works, and make sure you know that the company that you're putting the money into it is someone or something that is legit. And but the main thing is make sure you understand it. Once you get into it, even though you don't understand a lot how it works, make sure that you protect all your coins, wallets, or exchanges. So there's different type of wallets. There's wallets that you can have on your mobile phone. Make sure that you have a password protected wallet. Make sure that you can have a second verification process, meaning that you can get a text message on your phone every time that you get into your wallet. You can put first your password and then the code that you get on your text message. Um, Make sure that nobody else has access to it. Make sure that if you have it in your computer, make sure that you have a very good software that can protect you from getting hacked. You can still get hacked. That's the biggest concern with cryptocurrency, that it is digital, so anything digital can get hacked. The blockchain cannot get hacked, but your wallet can get hacked.
Mm.
So you have to make sure that you take those steps to protect yourself. Make sure that you have double verification processes. Nobody has access to your wallet exchanges or anything. And if you have an exchange, let's say Coinbase, Binance, that the email that you use is the one that is only you that is going to use it. And also do the second verification, which either you can get a text message on your phone or you can download an authenticator app where it would create a code that nobody else can see within seconds, and then it would generate one more code in a few seconds. So those are the type of things that you can uh, do to protect from getting hacked or from getting scammed. From getting scammed, you have to make sure that you know where you're putting your money into it.
Mhm. Mhm. And
Mm.
I think a lot of people that could be investing in this might not even know how to use computers very well. And
Yeah.
so, this is very complex security measures that are all electronic, all, you know, based in that. So, if we shift just a little bit and we say, okay, so we understand crypto now. And now let's switch to, I'm getting divorced or something is happening. How do I know? And is there any way for me to know that my spouse has like secretly invested assets in cryptocurrency?
Yes, hopefully your spouse already told you. Like when my husband first got into it, I'll be honest, I didn't understand them much back in 2013. I used to tell him, "You're crazy. Where are you putting our money on? How is this virtual currency works?" So what what I did on a personal level when he first started getting into it, I told him, I need you to tell me where you put in the money because if something happens to you, nobody else can access that. So if your spouse already gave you the information for you to access it in case of something happens, because we don't know what's gonna happen tomorrow, um, it's easier. Now I have seen it from clients, and since the perception of crypto is to be private, a lot of people do not tell anyone if
Mm-hmm.
they have cryptocurrency. So
Mm-hmm.
one of the key things that you could do during a divorce or a separation is if you have a joint account or if you have access to the bank account of that other person, look at the transaction. If you see that your spouse sends $1,000 to Coinbase, that would tell you that that person has a cryptocurrency or at some point had it. So it will give you a clue that something is there for you to investigate. That's the easiest part. Now, if it gets to a nasty, complicated divorce, then you might need to get the court involved, and then you will have to request access to the person's bank statements, to the person's computer. If you already saw your spouse downloading apps in their cell phone that will show you that if that they might have cryptocurrency, and again, that goes back to getting education because now you have to do a research or you can hire someone to tell you, okay, there are so many apps with cryptocurrencies. You need to know the name of the apps to be able to know that that person has cryptocurrency. Now, when it gets more complicated, let's say that person doesn't want to tell you, doesn't want to tell the court, but the court said, okay, you need to give us information, then you would need a cryptocurrency investigator to investigate if that person has cryptocurrency. And usually, what we look for um, bank statements to see if there is a transaction to going to any cryptocurrency exchange or platform. Um, we also look to see if that person has, which you might need. Again, it might be invasion of privacy, so you will need the court to approve it to get access to the email, to the person's email, to see what type of cryptocurrency they have gotten into it. Because I do not recommend anyone to do an investigation behind someone else's because then you might be breaking some laws. But and then at the worst case, you would need to get the court involved. And the apps on the cell phones, on the computer, all of that, you need to make sure that if you find anything that is cryptocurrency, also there's paper wallets. If you find a paper with a QR code, check it out. It might be a wallet, a cryptocurrency wallet. Usually, it has a lot of numbers and letters at the bottom, and then you can go to the blockchain and put that address in there, and then you can see all the transactions there. So the main point is to get to that blockchain ledger information. So, but before you get that, you have to make sure you find the information.
Mm-hmm.
Sometimes what I have seen it's not that common yet because crypto is something that is booming now, and now people are understanding, and a lot of people are getting to know what it is. But what the court, I was reading about a case the other day. The court made the ex-husband provide all the wallet addresses, so he needed to provide it. He said he didn't have much, that he had $2,000 in cryptocurrency. When the crypto investigator looked at all the wallet addresses, he had $250,000 in cryptocurrency that the wife didn't know about. So yeah, that's one of the things that it is complicated. It takes a lot of resources as a regular person, like let's say, God forbid, I'm getting divorced tomorrow. My case is different because I have access to everything, but somebody else that is getting divorced tomorrow and they don't know anything about it, it
Mhm.
gets complicated, and then you will have
Mhm.
to either hire someone or just do a lot of research.
Well, and I think that, this is kind of a duplicate question, if you will, so if they're in the process and trying to prove the other spouse is actually hiding it, what I'm hearing you say a lot is that a lot of times they're printing it on a piece of paper. Maybe that piece of paper is going into a safe or a security box or a lockbox. So I'm thinking, even if you could identify that there was a receipt for a security box, or in your house, if there was a safe, there might be documents in that capacity. Do you also see, I mean, you just talked about the case where they had to give all the wallet information. Doesn't that also create a little bit of a complication that you have to provide this information, and now, is it less secure in some capacity? You know what I'm saying?
No, because the information that they had to provide is just the address. The
Okay.
address it is found in the blockchain and it's public information. They do not have to provide their private key unless when the government, the cases that I have seen that the government has requested people to provide their private key is when it is a fraud case. But let's say the divorce, in this case, the divorce case, uh, Josh says to the person that has the asset, said, okay, we're going to split it 50-50, then that person willingly will have to send that 50% to the other person wallet.
Gotcha.
And but he does not have, or he should do not have to provide the private key.
Hmm.
If it gets more complicated, that divorce cases can get complicated, then they will have to hire a third party to act like a mediator, and then that third party will have to get either the coin sent to a wallet or the private key to make sure that they get splitted.
Right, because they would have to verify the amount and
Yes.
and things like
The
that.
amount the amount you cannot verify it by looking at the blockchain. You can verify the amount.
Oh, you can.
Um, yes, you go
Okay.
because you see the blockchain ledger is like if it's like a bank statement, to put it that
Mhm.
way, for all the transactions that happen in the blockchain. But it's a public information ledger. So if you go in there, you will see a bunch of transactions. It will not tell you who it is, but if you already have the wallet address and that person said, yes, this is mine, then you are able to tell, or the judge in this case will be able to say, okay, you have this much because we see in the blockchain that you have $250,000. We need you to split it with half and half, just to give you an example.
Yeah, that's a good example, because how it would be split, in if you had a normal investment account, we would do this quadro, which is like you tell the bank to split the account. But in this situation with cryptocurrency, it would be like the blockchain will say you have the 250,000, and then the person that owns those accounts would transfer the 125 or half of it to another person's basically cryptocurrency wallet that they would
Mm-hmm.
have to create, right?
Correct. Correct.
Okay.
Mm-hmm.
And so I think that gets us a little bit to our next question, which is, how are the crypto transactions tracked in this ledger? But also, when let's say I'm the spouse and I get that 125,000 transferred to me, like, I don't know anything about it. Can I just go and can I get can you give me some cash instead?
Yes, yes.
Okay.
If you don't know anything about it, I suggest that you hire someone that can help you. But if you move it to any exchange, like let's say the biggest one, Coinbase, Binance, and Kraken, any other that you can use, you can move it there, or you can receive it there, and then you can just sell your coins in that platform and then get your US dollars deposited into your bank account.
Mhm.
So
Or
you could do that.
in some cases, I could actually use the currency to buy other things that I would need.
Correct.
Okay.
Correct. Yes. And you can also in divorce cases, the spouse can decide if, let's say you said, I don't understand anything about crypto. The spouse can say, I want the money in cash.
Mhm.
So that other person can say, okay, I'm gonna give you $125,000, and I'll keep all my coins, and I don't have to give you anything other than just cash.
Yeah.
So
Yeah.
that's one type. And how cryptocurrency transactions are tracked. Again, you can go to the blockchain. There are many different type of blockchains. You can go to blockchain.com and look there. They have some blockchains, Ethereum, Bitcoin, that you can go and see the transactions. There is so many other websites that you can go, like Etherscan, which is for Ethereum. Ethereum is also one type of uh, cryptocurrency where you can go and see all the transactions that happen in the Ethereum blockchain. There's also for more complicated cases, like the divorce case that we discussed. There's also cryptocurrency investigation software that basically those software, what they do, you put the wallet address in there, and then it will show you all the transactions and where it went to, and then if it went to a known exchange like Coinbase and Binance, if it went to the dark net or the black market, it will show you all of that. It will show you a graph of the movement of the transactions. So even though people think they cannot get caught using cryptocurrency, there are ways to verify and trace the transaction. It is not the easiest job to do, but it is not the most difficult one, and it's not impossible.
Mhm. Well, and I think a lot of what I'm hearing is similar to many fraud investigations, which is if we don't have the central important pieces of information, we're looking all around in the outskirts to try to find a clue, a crumb, a something to kind of walk us through some other pattern. So that makes a lot of sense. I just have a couple more questions because I think
Hmm.
you mentioned it, and I had never really heard of this term. But is there a difference between Bitcoin and is it Ethereum that you said?
Yes.
Okay.
Hmm.
What is the Ethereum?
So basically, Ethereum is a type of currency.
Okay.
Bitcoin was the first one created.
Okay.
It was created, if I cannot remember exactly where it was, but around 2013. And it was the first one, and is the one with the most value right now.
Mhm.
Um, the difference between the two is that they were created in two different blockchains, and one is older than the other. One has more value right now than the other, which is Bitcoin. Um, and you can compare those. Technically, you cannot, but if you were talking about Dogecoin, so yes, that's another type of cryptocurrency. There is so many type of cryptocurrency right now.
Okay.
Some have more value than the other because of the way that they were created and the way that they show more privacy, more protection, and they make people feel safer.
Mm-hmm.
I cannot go into detail on which one you should choose, but they're, to put it in simple terms, they're just two different type of cryptocurrency. Right now, if you want to get into buying Bitcoin, then you would need a lot more money than buying Ethereum.
Okay.
Mhm.
Gotcha. And it's like with anything. I mean, if you're going to invest in something, you need to do your own due diligence or work with a professional and
Mhm.
diversify. I
Yes.
mean, don't put all your literal coins in one basket or wallet
Yes.
at any capacity. I think if we want to just summarize, you know, do we want to say there's kind of a couple misconceptions about cryptocurrency, and what do you think are the biggest ones? Because we've talked about a lot of stuff today, but is there anything we didn't cover or anything that you just want to like clarify in a really easy way?
The biggest one that I have seen from clients is that they do not have to report anything to the IRS because it is supposed to be private and confidential. You do have to self-report. You have to make sure that you self-report the capital gain and losses from crypto and your income from crypto. And there is no such thing as 100% private because even though your name is not out there, the blockchain ledger is public and people can see the transactions. And if something happens, if you get into a nasty divorce later on, you will have to provide that information.
Mm-hmm.
So it's better to be upfront. Another misconception is that there's a lot of YouTubers out there telling people invest in crypto and then open an LLC and make it an S corp. No, no, you cannot just because you bought $10 in cryptocurrency open a company because there's a lot more things that go into it. And one thing that is my pet peeve is do not listen to everything you see on YouTube. There is a lot of people that they do not know what they're doing and they just saying things on YouTube because they just want more views and more money from YouTube.
Mhm. Well, and I think that, a lot of people were paying attention all of a sudden when Doja Coin came out and, made a run on the market. But I also think that people didn't look much beyond that, right? They were just like, "Oh,
Mhm.
okay, great. Let me go in and make 3 times my money in a night," and that's never how it all works.
Mhm.
But I think it to me, it at least got people talking about it more. People maybe interested in like, okay, if that could happen, what does that actually mean for this? So I think that that was good because it is, you know, something that a topic right now that people are saying, oh gosh, stay away, it's scary, or, yes, invest everything, and
Yeah.
this is how we do it. So,
Yeah,
um,
now that you say that that is scary, it is true. A lot of people say that it's scary, but I do think that cryptocurrency is not going away. And if you do really understand how it works, then you can get into it and make sure that you take all the procedures to protect the cryptocurrency. But cryptocurrency is not going away. It is going to be the money of the future, and I do believe that it's going to get bigger and bigger because now even banks are getting into it. Banks
mhm,
want to get their hands into it, even though the vast majority of the community don't want them to get into because that's the purpose of the cryptocurrency to be as decentralized, to
mm,
not be controlled by any bank. Is just cryptocurrency. It might be scary for a lot of people, but if you see it for let's say in Africa or any other country that they do not have the resources that we have in the U.S., they can have their family members that are in the US send them money through cryptocurrency and they don't have to pay fees to those companies that work sending money. Um, like in El Salvador, they have now they use it as on a daily basis. You don't have to go to the bank to get your money. You can just go to an ATM and get your money or buy coins. So it is something that is going to be the future. It's just that we still have more room to grow and understand how it works, and it's up to the people that are in it to make sure that they educate the vast majority of the population. We need to educate people. We need to, even though there's the community, the cryptocurrency community, the vast majority do not want regulation. I'm a person that I want regulation to a certain point, to the sense that we need to prevent people from getting into it and just scam others and steal money from people. That's the thing that we need to prevent from happening. But it's gonna be something that is gonna stay. It's not something that is going away. We just need to understand that it will keep changing, because it's something that I say that it changes by the minute, but it's gonna be it will keep changing just to keep up, and that's why a lot of government agencies and a lot of banks are afraid, and that's why they want to make it seem that it's something scary,
Mhm.
because they will lose a lot of money. The banks are
Mhm.
going to start losing a lot of money in fees. So
Mhm.
they don't want people to get their hands into cryptocurrency because, as I said, it's decentralized.
Mhm.
Um, and it's right now it's not that regulated. But if we get in a common ground, the banks, the government, and the public gets into a common ground where we can make it work for everybody, then I think it's gonna be great. It's gonna take a long time, but it's gonna happen soon or later.
Well, and I think you bring up another point that I'll just ask a simple question is that, you know, it seems like there are some tremendous benefits for businesses to also get in because, I'm thinking even our business, right? Like when people pay us, if they pay us via credit card or through our online, we're paying the 3% to
Yes,
transact that, and so that and then as kind of the borders, start to blur now that we're even in the pandemic economy, we've kind of started to be able to maybe do business a little bit further and wider than we could before. There could be implications for even international transactions that could be beneficial
correct.
for a business, right?
Yes, correct. And to give you an example, let's say now people are buying houses and property with cryptocurrency. They would pay a lot less money in fees if they do it through cryptocurrency, because you know that you will have to pay wire transfer fees, you will have to pay lawyers for the escrow account fees, and it gets complicated. So for businesses is gonna I think it's gonna be very good, and it's good. I have a lot of clients that they have open businesses, or they have decided that they're gonna start taking cryptocurrency, and we help them with the accounting and the taxes and all that, and we give them financial advice on how they are based on their financial situation, their financial statements, and how the taxes are looking, and basically tax planning advice. So for businesses, as you said, there's a lot of the transactions happen quicker. Actually, let's say you
Mhm.
send a wire transfer, depending on the bank, it could take from 5 minutes to even days. But
Mhm.
if you do it on the blockchain, it takes seconds.
Mhm.
That's why you have to make sure that when you do it the right way, so you can have your money in your wallet or exchange within seconds. You don't have to wait for the bank to process it, or for the bank to have their compliance department call you, like it happens sometimes that you process a wire and they call you and they want you to verify. The other day I processed a wire from one of our companies, and they called me. They asked me for my driver license number, for my address, for my social security. all of that. With the blockchain and cryptocurrency, you avoid all of that. You know that you're sending the money to the other person or company, and you do it within seconds.
Mhm. Mhm. No, I mean, I think it's very fascinating. I think that everybody's gonna have to escalate, and to me, the interesting part is the ledger, right? The blockchain
Hmm.
ledger, and we use ledger in accounting and finance for a certain reason, but basically they're keeping track, and so I
Yes.
could see that in the future, maybe not now, but in the future, if the IRS comes to audit a big client, they could easily say, one of the questions could be like, do you have any crypto wallets? And they can go back up to the blockchain and look at any transactions in that wallet. Oh, you didn't file any taxes for this 2 years, So I think that you do have to be very careful because the mechanisms are in place to track it. It's just that there might not be the connection of, everybody getting that information, right?
Yeah, they're already doing it. The IRS is already doing it. So you will find people that they will receive a letter from the IRS saying you have a $25,000 bill because you
Mm,
did not report this in your tax returns. And right now in your 1040, you are required to. They ask you a question: do you participate in cryptocurrency? You have to say yes or no. And if you say no, and you are actually participated, that will also complicate your case because
mhm.
then you lied to the IRS. And
Right.
they do have they use those crypto investigator tools that I told you about, those the software, and they use firms that already know how to work with that. It is they're not that advanced yet, and they are just getting into a few people. But in the future, like you said, it's gonna be very hard for someone to hide it from them.
Mhm, mhm.
Hmm.
Yeah, no, it's very interesting, and I think that, we've done so much educating today. I love how you explain things. I really appreciate it. But at this point, people are probably like, I need to know some information about this. Like, what is going on? So if they want to reach out to Carolina, how are they going to reach out to you and what kind of services do you provide? Because it seems like you really have the depth of knowledge in crypto, but how can you help people?
So I have my own company. My company is B Pro Accounting, but I'm also a partner in another CPA firm, Polygon Advisory Group, and I'm also a CFO VPN Capital Group. So I always suggest people to go to my LinkedIn profile. I do post a lot of things about crypto, a lot of news, a lot of things showing my perspective of some crypto information. And you can go to my LinkedIn profile, look at it. You can decide which one you want, which type of information you want from me. And you can either access my website, which is bproaccounting.com, or you can go book an appointment with me through my website, or you can send me a message through LinkedIn, however you prefer, because as I said, I'm part of different companies, which all of them have to do with cryptocurrency.
Yeah, and that's how we kind of started paying attention to what you were doing because you were very active on LinkedIn and you are able to talk about crypto in a way that I can understand. And I think, you know, it was refreshing when you said that crypto is changing so quickly because I swear every time, I try to get into it for a valuation purpose or something like that, I'm just like, it's overwhelming. It seems like the information that I thought I knew, I didn't know. So maybe it's just changing so fast. So that makes me feel a little bit better.
Yeah, it changes by the second, so don't worry. Because even myself, I feel overwhelmed sometimes. Like I was having a conversation with a client yesterday, and then he just started talking about something I never heard before. So while I was talking with the client, I looked it up online, and because there's something always coming up
Hmm.
by the second, and you just have to keep up with it.
Yeah, well, that's awesome. Well, that means that we'll probably reach back out to you in 6 months to a year and be like, it's all changed. And but maybe at that time, I would hope that I would try to get more information and maybe even try to invest because I did when that whole Doja coin thing, I was like, okay, I want to get in. I want to get in. What's going on? And then I was like, how do I even buy this? Like, what? Wait a second. I don't even know how to
Yeah,
do this. So it is a learning curve for sure. But
yeah.
we appreciate all of your information, Carolina, and
Thank
we
you.
hope to have you on again.
Thank you, and thank you for having me.
Yes, of course.